Hey guys, Larry here with the Bulk Loads podcast coming to you 2 days before Thanksgiving. There's so much to be thankful for this year. As you can see, we have started the office decorations. We are, as a company, talking about what we're thankful for. Each of us in the mornings have been taking turns, and the common themes friends, family, support, a culture, an office culture that supports people. Some of the common themes. And in my life, man, I'm so thankful for my wife, my kids. I'm thankful for Jared and Bulk Loads, and his friendship, and Matt and Rachel and everything that they've poured into this industry. I'm grateful for you, our clients, most of all. We wouldn't be here today without you guys. And our goal and our hope every time we're reflecting on being thankful, our hope is that our services provide you with a better outlet and more access to loads, and more services that help support your business and allow you to run your business efficiently and effective. So thank you, most of all, and 'tis the season. So I want to really talk about two things today, with one goal in mind. A lot of insurance renewals are coming up the first of the year. First quarter will be busy for a lot of people. We're starting to wrap up a lot of our fourth quarter renewals here, getting with underwriters with the holidays. A lot of underwriters are out, and so it's nice to get renewal paperwork in, get your numbers back, sign, and then go enjoy the holidays with friends and family. So, one of the goals of this podcast is to talk about how to get a better renewal. It's really a tough thing to talk about, and I'm going to cover a topic that's a little controversial, not a ton, but I see it both ways, and I want to cover both sides of it. So, the two topics that I'm going to really discuss: number one is sharing pricing with your agent. And number two is more technical. I'm going to talk about deductibles and the different options and what I would recommend. So let's hop into it. Sharing pricing with your agent. This is the age old question. We see it every single renewal period when we're competing for business. We've trained our producers to ask for the pricing, and it's probably not for the reasons that you're thinking. If you've been doing this a while, you've probably come across some agents who maybe aren't the most forthright or ethical, and they ask for your pricing, and then you give it to them, and next thing you know, the quote that you receive back from them is about $3 cheaper, right? So we never want that practice to happen. The reason we ask for pricing is really more for negotiating power. So I can't speak for every agency, but I can speak for BulkLoads Insurance. We are going to give the best price no matter what. We never get quotes back from our underwriters and then tack on more money and then send it to our clients if we know their pricing. That never happens. Now, again, I can't speak for all agencies, and I'm certain that all agencies don't operate. But for us, our goal is to be client first. And so we make decisions that are based on what is best for our client. Now, we never cook premiums into that, even if we know the pricing. But what we can do if we know the pricing is let our underwriters know where they need to be to actually win the business. Now, if you've been doing this a while, you know insurance right now is a very hard market. What does that mean? That means that insurance underwriters are seeing hundreds of submissions. Everyone is shopping their renewal because they're looking for better rates because rates have continually climbed. So one of the advantages that we have as a group is getting pricing and then proactively discussing that pricing with underwriters. We don't always share the actual price. So let's just role play this out, right? I'm an agent and I'm like, hey, Bob, what's your pricing? You're like, Larry, I don't want to tell you the pricing. And I tell you, Bob, tell me the pricing so that I can go back and negotiate with the underwriter. So Bob's like, hey, okay, I've got 3 trucks. I'm paying $30,000. Okay, now I got a baseline. So when I get the paperwork in and I start calling my underwriters and discussing the opportunity with them, one of the first questions they ask me is, where do I need to be to win the business? Now, that doesn't mean I'm going to say, well, you need to match $30,000. No, what that means is what I'm probably going to do is I'm going to say, listen, to realistically have a shot at this opportunity, we need to be at $25,000. And then I'm going to gauge their appetite, right? I'm going to look, I'm going to analyze the tone of their voice. I'm going to analyze the feedback and what they say. And if I think that they have a shot, they will then tell me like, hey, Larry, yeah, no, okay, 25, yeah, I can get there. Now that doesn't mean that that's the first quote, right? So a lot of times we have multiple different insurance companies that are going to quote the business. So I may get one of my best markets on it. You know, I may get Acuity or Continental Western on it, and we may get them at 25, and then we may use that as leverage for the next market. So we might go back to them and be like, hey, listen, I thought 25 was going to get it, but I just got a better quote from one of my other carriers and they're at 22. Do you have any wiggle room, right? And so we're playing these guys off each other, but what you need to remember is ultimately the goal is to get you the best overall rate. And so that's the reason we ask for the pricing. Now, we deal with a lot of motor carriers that have been doing this a long time that have probably been screwed by sharing their pricing. And so I understand where the market's coming from. I'd say that, you know, typically if you're doing business with us, you probably trust us. You know that our goal is always to keep the client in mind. So we don't deal with that as much as other agencies, but it is still something that we deal with, and it's still something that we ask for every single time. It also creates what happens with the underwriters when you share pricing is that your submission goes to the top of the list. And that's what we always want to do because these guys see thousands of submissions every single week. So when we send one from BulkLoads Insurance, we want to make sure that when our underwriter gets it, they're like, oh yeah, this company we write a lot of business with, they know the trucking business really well. Let's put that submission at the top because we know we're going to win that one. So that's kind of the game behind the scenes. But I want our listeners to understand that when we ask you for pricing, we're never going to use that against you. We're always going to make sure that you're well taken care of and that the pricing is a leverage tool to know whether or not we're going to be in the ballpark. Now, this happens all the time as well. Larry, I've got really good pricing and I'm at, you know, for my 3 trucks, I'm at $15,000 and I'm with a really good market. I get it. Stay there. Nope, it's not worth your time to compile documents and it's not worth my time to go and have those negotiations to be double the price, right? That's never going to happen where it is a successful outcome. So what we do to avoid doing all the work on the front end is to let you guys know you're in a really good spot. It probably doesn't make sense for us to move forward. Now, if you hate your agent and you're getting terrible customer service and we have that same market, yeah, it may make sense for us to take it over. But generally speaking, that's not going to be the case if the pricing is extremely low. And that's another reason why we ask. It makes a lot of sense to know that pricing before we start working on it to let you know and to save you time and energy on the front end with not dealing with it if it doesn't make sense for us to work on it. So, okay, that's topic number 1, sharing pricing with your agent. It's kind of the behind the scenes of why we always ask for it and the benefit to you of sharing it. Topic number 2 is going to be about deductibles. Now, deductibles on the surface seem fairly understandable, right? If you've had a personal auto for a long time or a house, you probably kind of have a baseline understanding of what a deductible is there to protect, right? So a deductible in simple terms is the insured's skin in the game, right? So if there is an accident on the physical damage, there's a deductible. So you're comprehensive in your collision on your truck, there will be a deductible on there. Over the years, deductibles have significantly changed. And I'll tell you why. So if you have a lower deductible, so if you have a $500 deductible or a $1,000 deductible, you're going to pay more premium to have a lower deductible. So a lot of times we see trucking companies with $1,000 deductibles. Well, the reality is if you're turning in a claim between $1,000 and $2,500, it may increase your premium if you turn that claim in. And so a lot of times what we will recommend is save the premium on the front end because you don't know if you're going to have an accident. So maybe as a way to get some cost savings, let's raise deductibles to $2,500, right, on all your equipment. That's going to lower your physical damage premium on your equipment. Also, is going to give you more skin in the game, which is why underwriters lower the premium in the first place. It's also going to help with small nicks and dings that you decide to just fix yourself versus turning it into insurance. When you turn claims into insurance, typically premiums go up because on that next renewal period, they look at the claims history and they decide how much more they need to collect for you to be a profitable risk for them to insure. So I always recommend a deductible increase if it makes sense for the insured. I am of the opinion that nowadays with inflation and the cost to repair a vehicle, you probably shouldn't have $1,000 deductible unless there's no cost saving. So what we always do when we get a policy, get in, one of our carriers like, hey, we want you to quote this. All right, great. Send me your policy. Let me look at it. If I see $500 or $1,000 deductibles, that's the first piece of information I look at to determine whether or not there's opportunity for cost savings. So always recommend looking at it, analyzing it. Moving your deductibles up may not save you a ton of money. And so it may not make sense for some people, but the larger the equipment values, and the higher the deductible, the more money goes back in your pocket as the insured. So we want to make sure that the deductibles are accurate and that you're good with the risk. Now, I've been getting a lot of questions lately, like, Larry, what if I move my deductibles from $2,500 to $10,000? I think I believe that is something that everybody needs to think about and actually run the numbers, right? How many claims did you have last year that fell in that $0 to $10,000 bucket? Well, if it was 5 or 6 and there was a lot, maybe it doesn't make sense. But if it was only 1 or none, right, now it might make sense to move and collect that premium, move the deductibles up, collect that premium up front and put money back in your pocket instead of paying it out. So deductibles, there's options, right? That's what you got to know. If you haven't asked your agent about, hey, what would this do to my renewal premium if I up the deductibles to $5,000 or $2,500? That's something I would definitely recommend. It's simple. It's not hard for your agent to go find out and get that number, but it could put thousands of dollars back in your pocket. And that is a significant amount in terms of where we're at in the market today. So never hurts to ask. It never hurts for you to send us your policy and let us make recommendations on it. Now, I don't always compare apples to apples. I hear that all the time. Larry, I want apples to apples. Well, the reality is maybe I don't think that policy is written correctly. So why would I go out and get you an apples to apples comparison when we really need maybe higher liability limits? We're seeing more and more litigation, right? So maybe instead of a $1 million limit, maybe what's really necessary for your operation and to protect your assets is if we move that liability limit up to $5 million and go out and get you an umbrella. That's entirely possible. Now, it's not apples to apples, but it is done correctly and it protects you and your assets. So those are the things that we're looking for, and deductibles obviously play a role in that. So review your deductibles and consider sharing the pricing with your agent. If you don't trust them, that's a bigger problem. If you find yourself hesitant to tell your agent your pricing, maybe you need to reassess whether or not they should be your agent in the first place. If you do trust your agent, my recommendation is that you say, hey, here's where I'm currently at. Here's really where I need to be. You tell me, you're the professional. You tell me if that's realistic or not, and then let them go to bat for you. So those are the two things. Renewals are coming up. The goal is always to get a better renewal. In a hard market, getting a flat renewal, meaning no premium increase or even a decrease, you're in good shape. So, hey, keep trucking out there. If you like this podcast, subscribe. We're always here for our clients. We love what we do. We're thankful. We're 'tis the season. We're thankful for you guys. And we appreciate all your support. Thanks, guys.